What is going on, everyone? I hope you are all having a fantastic day. So, I know when it comes to investing, it can be really daunting when you're just getting started because there's so many different opportunities and places to invest your money. And while there is absolutely not a one-size-fits-all solution, I have received a lot of questions from all of you asking me to pull back the curtain on where I invest my own money. So today, that is exactly what I'm going to do. I'm going to take you inside my own investment portfolio and show you exactly what investments and specifically what ETFs I own to allow my money to work for me. So if that sounds interesting to you and you want to get some tips on how to better your own investment portfolio, then let's jump right into it. So first of all, before we get started, I obviously do need to clarify that this is absolutely not investment advice in any way, shape, or form. I'm solely making this video for entertainment purposes, and while there might be some tips that you may be able to apply to your own investment portfolio, the actual investments themselves that I'm going to be talking about are simply ones that I personally see value in for myself, and by no means does that mean that you should just go out and buy that on your own. When it comes to investing in anything, it is really important that you understand what you are investing your money in and why that particular asset is the right fit for your hard-earned money. So whether it's me talking about my own investments or anyone else online or in your life talking about where they invest their own money, always do your own research and understand where you are actually investing your money, and don't just blindly invest in something just because someone else told you to do that. Alright, so with that out of the way, I have about 90% of my own investments on a platform called Wealthfront, and that is not what today's video is about. So if you are curious about that platform and why I personally use it, then I have done a number of videos on the Wealthfront platform and the automated investing services that they offer. But you want to find an investing platform that works best for you and your financial goals and offers the stocks, ETFs, and other assets that you are interested in. That being said, all of the ETFs that we are going to talk about today that I personally own are pretty much available from every major brokerage, so regardless of what platform or brokerage works best for you, you should be able to at least look up some of these ETFs and get some more information. So now let's answer the question that is probably the reason that you clicked on this video, and that is, where do I invest my own money? Well, like I said, for the most part, I invest in what's called ETFs, or exchange-traded funds, and essentially this is a basket of different securities and assets that diversifies your money across thousands of companies in most cases. Now, if you're familiar at all with investing, then you've probably heard of ETFs, index funds, mutual funds, and all of that kind of stuff, and it can be really confusing to differentiate between these three different investment types, especially those ETFs, index funds, and mutual funds. A while back, I did do an entire video explaining the difference between ETFs, mutual funds, and index funds, so if you are really confused about that, then definitely check out that video. But personally, I have found that the ETFs are a better option in terms of the lower management fees when compared to similar index funds and mutual funds, and I think we can all agree that lower fees is definitely better. Now, that's not always the case, but when compared to mutual funds in particular, which are typically more actively traded by a fund manager, the mutual fund almost always charges a higher fee. Plus, on top of that, over long periods of time, like decades and decades, the data shows time and time again that the funds which simply purchase assets and leave your money alone usually outperform funds that were investing in similar assets but were being actively traded by a professional. Alright, enough about all of that. What ETFs do I invest my money in? Well, personally, my portfolio is broken down into 6 different categories and ETFs, which are US stocks, foreign stocks, emerging markets, real estate, corporate bonds, and emerging market bonds. And obviously, I also keep some cash on the sidelines, which I guess is a 7th category, but for the most part, we are going to be focusing on those 6 investment categories that I just mentioned. Okay, so starting off with the first category, which is usually where most people get started with investing, and that would be US stocks. This one is pretty self-explanatory, but this is going to be investments in companies or corporations that are largely based here in the United States. And considering this is one of the largest economies in the world, there are lots of investments to choose from. So for US stocks, I keep it pretty simple, and I personally own the Vanguard Total Stock Market ETF called VTI. Again, I feel I need to reiterate that this is not investment advice and is just for entertainment purposes, but VTI makes up about 33% of my entire portfolio, which is by far the largest category. Now, when it comes to these total stock market ETFs, there are lots of options to choose from. So again, look at some different options and see what works best for you and your financial goals. But personally, I love Vanguard across the board, and almost every ETF that I own and I'm going to talk about today is from Vanguard. But there are lots of other companies like Fidelity, Charles Schwab, and a ton of others who offer their own ETFs that are very similar. Now, this is not a review on the Wealthfront platform, but one thing that I do like is they do show you some alternatives to the ETF that you personally own, and also give you some feedback and information on why your investment selection might be better or worse than the other options that they are giving you. So, like I said, VTI makes up about 33% of my portfolio, and that currently has an expense ratio of just 0.03%, which is pretty low when compared to some of the other options that we're going to talk about later on. Moving on from there, we have foreign stocks, which makes up about 20.2% of my portfolio currently. And again, there's lots of options to choose from with this particular category, but personally, I own the Vanguard FTS Developed Market ETF called VEA, and that currently has an expense ratio of 0.05%, which is a little bit higher, but is still pretty low when compared to other expense ratios. This is the second largest allocation in my portfolio, and foreign stocks is a great place to expand your current portfolio if you do currently only own US stocks. Next up, we have emerging markets, which is usually viewed as companies that are based in developing economies like Brazil, Russia, India, or even China. And this can be a more volatile investment because it is an emerging market, but it can also offer higher returns as well. So for emerging markets, I own the Vanguard FTSE Emerging Markets ETF, which is VWO, and that makes up about 11.5% of my portfolio currently and has an expense ratio of 0.1%. The next category is a bit of a curveball and probably feels out of reach for a lot of new investors specifically, but that would be real estate. And the good news is that in order to invest in real estate, you absolutely do not need to go out and literally buy a house or a commercial property. Instead, you can invest in what's called a real estate investment trust, or a REIT for short, and that allows you to invest in real estate without having to actually go out and buy a property. No surprise here, but I personally own the Vanguard REIT ETF, which is VNQ, and that has an expense ratio of 0.12% and makes up about 11.5% of my portfolio currently. Now, that's most of the exciting stuff, but no healthy portfolio would be properly complete without the not so exciting but very important bond investments. Without boring you to death, a bond is basically what's called an IOU, and you may have received a bond when you were a little kid for your birthday or something like that, and the person who gave it to you said that you could cash that in when you were 18 or something along those lines. And while at the time that may have felt like a huge bummer, a bond can actually be a really great and consistent long-term investment that can bring a lot of stability to your overall investment portfolio. Now, bonds come in all shapes and sizes, like corporate bonds, government bonds, emerging market bonds, and a ton of other options. But personally, I own only emerging market bonds and corporate bonds. Emerging market bonds typically offer a greater return, just like the regular emerging market investments, but they also come along with a greater risk. So that is something to keep in mind when deciding if you want to invest in this kind of bond. But currently, I own the iShares JP Morgan US Emerging Market Bond, which is EMB, and that actually makes up 15.3% of my portfolio, which is pretty significant. Now, the bummer with this one is it currently has an expense ratio of 0.39%, which is pretty high, but it does pay a decent dividend as well. So a large portion of what you pay in expense ratios is going to come back to you in the form of a dividend, so it's kind of a zero-sum game. Outside of that, I also own corporate bonds, and for me, that comes in the form of the iShares iBoxx Investment Grade Corporate Bond, which is LQD, which makes up just 7.7% of my portfolio currently, and has an expense ratio of 0.14%. So there you have it. That is my entire investment portfolio, and for anyone doing the math, the small remaining percentage is just cash if I wanted to invest in any opportunities that might pop up on the market, but otherwise I keep it fairly simple across the board. Now, I will also mention that a majority of my investments is kept in what's called a Roth IRA, which is an investment vehicle that offers some really great tax advantages percentages, but there are tons of different investment vehicles to put your money in, whether that be a standard investment account, a 401k, an IRA, a 529 education plan, and a million other things as well. So as far as the investment vehicle is concerned, that's really going to depend on your overall financial situation, but just remember that regardless of what type of investment vehicle or account you personally have, you're usually able to buy a wide range of assets, which would include all of these ETFs that we talked about today. So I hope this video was entertaining in some way and hopefully gave you some tips that you can apply to your own investment portfolio and find the perfect ETF and other investments for you. I would love to hear what your favorite ETF currently is and why you see value in that particular investment. And as always, if you did get value out of this content and you want to help support me, it would mean a lot to me if you would hit the like button, subscribe to the channel, and share this video with someone who you think would get value out of this content as well. And of course, take it easy, and I'll see you in the next one.